Good evening. This is the Elliott wave update for the NASDAQ 100 for Tuesday, July 12th, 2022. Here in the NASDAQ, starting on the daily chart, there is nothing to change on the way that the chart is labeled at this moment. An update to this current count for intermediate wave C just got a little bit of a boost, and that this is likely the completion point for a minor 3, and we remain in a minor 4. Now, you may say, how do we remain in a minor 4? When you talked about if C failed, it would produce the minor 5th, which is true. That still is out there for proof, let me say. And the reason I do that is because I'm going to go, well, before I go down to the hourly, what it may be is a wave 4, minor 4 triangle. Now, that triangle pattern gives a little bit of support that this is minor 3rd, because if it was a minor 2, triangles don't form in the second wave. Triangles form in B waves and 4th waves. So here we are in the 4, and it could very well just work its way into, and I will show you how once we come down one more tick. So let's take a look. Let's go down to the hourly chart, get right into some of the details here, how it fits what's coming this week, how it fits, we have expiration, et cetera, et cetera, et cetera. There's a lot of things that kind of fit that will likely continue to suggest, I have to keep moving this because it moves it. When I put it on, when I go up a link, it moves it. So here we are in a triangle pattern. All of the waves are 3-wave patterns. And I know this B wave, a couple of you guys, thank you for noticing, because clarification is always a good thing. It does count, and it's may not be to everybody's liking, but that's 1, 2, 3, 4, 5, and that would be the A, and then this strange B wave reaction to interest rate. I believe it was on the 29th. Something came out on the 29th that caused this little woo, 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 and then back down again. So I called this the internal B, and this is the C, and that's a B. And there are several things that I can add to that as an analyst on Elliott, and having read enough Elliott and having looked at it, that the purist in me says I may have to accept it, because the purist wants it to be a 5, but it doesn't fit as a 5 into anything, because it fails on every single level, which makes the only other choice that they have is that's a 3-wave as a part of a larger correction, which is forming a triangle where all the legs are 3s, including, it'll still count up as 5, but it's going to be a big old 3. So we have A, B, C, possibly some of the D, maybe a little bit more. So if this is the case, one of the things that Elliott did notate when using Fibonacci's within a triangle is that the D wave would expect it to be about 618 of the C wave. So we run some retracements, and 618 is 11,678, we're going to call it, into that level, down to probably 11,602. As far as it being a C wave that was to go up and break above that high at 12,262, well, that basically got knocked out with this drop today. Because even if I'm going to count this as a C wave, the wave 1 was here. And so this would have been wave 1, wave 2, wave 3, 4, and then we needed that 5 to come in and not drop this far. 4 overlaps 1 pretty much by a country mile. And that takes this up to the C here. The failure still is there. If this wants to come into a proving ground and show us differently, then it's going to continue to go down. And it needs to break here, it needs to break there, and eventually it needs to break 11,348 to put the cap on that that's a C wave and we're moving out. When we break the bottom of the B, then we have to disqualify the triangle. Right now, we can keep the triangle pattern in place and let it develop, but it has limitations as well. So, but I'm looking for the D wave, and after the D wave can come down to here. D wave should not break that low. Get close, but not break it. And the D wave forms 3 waves. Then we're looking for an E wave, which again would be expected to rally back up. And following the guidelines for the triangle pattern, it should break the top bar, the top, you have the channel lines, and it'll break that top channel, swing out of it, but die and fall quickly. So the reaction to the triangle, once complete, is that it thrusts in the opposite direction. I think this could thrust to the upside, break back above, possibly, doesn't have to, but it can. Or we get an A, B, C, D, E, boom. So what we thought we could get from the C wave in terms of if this was a C wave failure for the minor 4 or even a minor 2, if we're going to go that far, then this would be the same type of a situation where you get the triangle A, B, C, D, E, and that would put it into a diagonal. And then the resolution is that it thrusts out of it, and quite often it goes to the width of the triangle. So that would be down to the bottom of the A wave and below. So that's 11,068, by the way. And that would then kick off that minor 5th wave. So yes, we still have a little bit more to go before we can say with certainty we're in that minor 5th wave, start looking for new lows, because here we sit. And we saw what they did today. Let me just drop this down to like a 15-minute chart and just see that opening this morning. It was pretty incredible to watch what they did. It's this. This is what they did on the opening. We are here. Here's the opening. Market opens. They run it up to 12,025 and then kill it. In the second 15 minutes, they took it from 11,977 all the way down to 11,856. And it dropped it a little bit more before they decided to just kind of keep it and then wait to the end of the day and drop it again. So it was a strange pattern in and of itself. So that left this rally followed by a decline that took out more than what one would have expected if it was to turn and continue to go up. So it gets left as this big island in the whatever. There it is. So I'm counting it as A of D, B of D, and we're in C of D. And I believe that if that's the case, there's a 1, 2, 3, 4. We get a 5, brings us in here, maybe down into here, and then rally in an E wave. So again, we have Asian markets, we've got European markets, and before it comes back to the US, and tomorrow we have CPI. A lot of people are hanging their hat on that CPI, particularly for direction that'll last longer than the 15 minutes after the numbers reported, that it will have a little bit longer effect in terms of what pricing we're going to be, what price will be acceptable for all of these equities, for all of these stocks and all the component companies moving forward as that number gets factored in. And it's going to be based on, of course, what's the read on inflation. And then we have on Thursday, we have jobless claims, and then we have PPI. People say people don't want to pay attention to producer prices. It's like, really? We need to, because what the producer prices are telling us is what's happening behind the closed doors at Apple and Amazon and Google, every company that has a product that they need to sell, not so much Google. They're all online. But Apple, the phones, production costs more. They cost more. We don't have as much money, inflation, et cetera, et cetera. So it's an inflation read. And if it's really going to be hitting the producer prices hard, and we see a big gap in that one going in one direction or the other, if its direction is up, then that means inflation is still busting its doors down in that all the sectors that deal with product, that deal with pulling product in, that deals with shortages, it deals with everything else that's going on when everybody's cost has gone up. So how does that then get factored in? So I heard somebody that nobody pays attention to PPI. I was like, oh yeah, they do. They better, because from PPI, it goes down to CPI. Whatever hits all of our companies that we buy all their products, we still have to go buy the products. We still have to go to the grocery store. We still have to buy gas to put in the car. We still have to buy electricity to charge our electric cars. So, and that all costs more. So, et cetera, et cetera, et cetera. So the number does mean something. And that comes on Thursday after with jobless claims. Friday, we have retail sales. That will also be a measure of inflation. So retail sales, are they higher? Are they lower? Are they, we're seeing, what are we seeing and what's going on with that? So a lot going on. And that will be reflected in the market. And that, I think, could also produce this chain of events that would lead to the triangle. So again, this is the D wave, A of D, B of D, 1, 2, 3, 4, 5 of D coming down in here somewhere, at least minimum, I would think maybe to here. Then we get an E wave. And I would not expect that E wave to actually break above. It could. We can get a thrust up and then a die and a thrust back down. But I would not necessarily be expecting that. But it could. That would complete then the E wave, that would complete the minor 4, and then it turns and it thrusts back out of this triangle to the downside though. And the triangle started, the triangle started at 1351, 11,000, I always do that wrong, 11,348 or 51, I think that low is, yeah. So that is technically where the first break would come. So we would be looking for it to move below that and then eventually below the 10,068 and then eventually down to the levels that we have been discussing previously, back out to that hourly chart. So it's not bad. I think we've got pretty much a pattern that likely is going to last up through Friday, I'm going to say. And then once the release from the monthly expiration, which is July, then we'll see basically what we'll be lined up to do. But hopefully we'll be on our way within one of those numbers or combined numbers triggers the completion of this minor 4, gets that fifth wave on the way, if not all the way, between now and Friday or tomorrow and Friday, 3 days. Yeah, we have 3 solid down days. Why not? And take care of it and get us down to that much lower number. In any case, I'm kind of going to wrap it up right there because there's not a whole lot to be adding, and I'm going to try to keep this on the short side. So again, if we are in a triangle pattern, then expect a small little bit more to complete a D wave, get an E wave that runs up to the upside. Possibility it could penetrate this topside border, goes up, fails, and then just comes right back down. Expectations first are coming out of the triangle. It should break below 11,348. So you can see that's going to be a pretty big drop. Wherever it gets to, it should be a pretty big drop coming back down. And then break again below 11,068. Same day, don't know. It would be really big if it did. So they really have to like a series of these numbers. In any case, eventually we're looking for this. down in here. And once that is complete, wherever it gets to, I can run the additional fibs, which will line it up better for where we think this should all happen. Okay, I'm going to leave it right there. And our next update will be tomorrow on the 13th of July.